Everybody, it's Michael Martin. Thanks for being here. So today I'm going to give you a bit of a free lesson and kind of have you listen in on some of the things that I'm chatting about with my high end clients and what we're doing coming into the end of the year and preparing for 2026. And you can call it a few things: a review, a post mortem, your goal setting, strategic planning. It can be a lot of things to a lot of people, but whatever you call it, I'll share with you a few of the items that we're looking at, that we're going over to see and how we can have personal improvement. Because without personal improvement, it's awfully difficult to have, trading improvement. So what we want to do is focus on process. If you focus on process and stay out of the results, you can free yourself up of a lot of, as we would say in New York, a lot of agita, a lot of discomfort. um, Now, of course, you need the returns, but in many ways, you have to take what the market gives you for your particular style and the time frame that you're trading. So we tend to not dwell on necessarily the outcome of winning trades or the outcome of losing trades, but the why. How did this happen in the first place? Was there, and it's usually because there's a breakdown in the process. This is, I learned enough, and I talked to Annie Duke about this on an episode, which is probably on the either Apple or Spotify or Audible, wherever you might hear or get access to the audio only files. That one was not recorded on video, so it's not going to be on YouTube. And we talked about how someone could play like a poker hand of 2-3 off suit, out of position, and represent that they have like kings and just do everything wrong and eventually win. And, again, you can bluff and do that once in a while, but ultimately you need to have good poker strategy, and you don't want to misplay the hand and get rewarded, because that'll end up teaching you that you could be onto something, right? So that's the tricky part. If you make too much money too soon in your trading, you could find yourself making money by doing all the wrong things. And so that when the market anomaly that's causing you to make money reverts back to the way things are normally, you could end up putting yourself in a bad spot to lose a lot of money, especially if it clicks and you're like, oh man, I'm onto something. I'm going to make a lot of money. And now I'm going to increase my size, just in time for the mother of all drawdowns. So you definitely want to look at your winning and losing trades, as well as the ones that you didn't take, and kind of go back and reverse engineer as to why, what was it that happened that led to that result? Because that's where journaling can help you, is because you can start to identify patterns in your behavior. I think the stock is going to move, or I thought the futures contract was going to move, or I thought the option wasn't going to expire worthless, so I didn't bother protecting my capital when I had the chance. Those are the types of things that could end up being very valuable to you when you do your, as I would call it, your post-mortem. If you're a discretionary trader and, you're coming into a drawdown and there's trades that you didn't take, right? Keep note of that, right? Because having good instincts can certainly help you. But you want to be mindful that if you're not taking trades because of fear, right? When you have your bona fide setup there, because fear can do a lot of things to you. Fear can make you double down and want to win it all back in the next trade. Fear could also psych you out, because you weren't mentally prepared for having 3 or 4 losing trades in a row, and now you've lost your confidence, whatever little you might have had, and you're destabilized as a person. So now very bona fide trading setups are coming past your face, and you're not taking those trades. And those trades could, in fact, bring you closer back to, digging you out of the drawdown just naturally, because those were the signals that you would have taken. So you want to take note of that and learn from it. Feel your feelings for sure. Also take note of the ideas that you were looking to put to work throughout 2025 or Q4 or at some point, but you never quite got to it, and understand why. Was it a mental block, or was there something that you needed to learn? Because sometimes those new ideas, could be, if they come from your intuition or things that you observe, you don't know if your subconscious is talking to you or not. So look to see, what happened with those ideas. How come you didn't implement them? Did you lose your nerve? Did you lose money? Did they look really good on paper, but were they hard to implement? And investigate that, because again, the self-knowledge that you'll take away from all of this is invaluable, right? You can't put a price tag on it. And guess what? Nobody else can give it to you. You got to do the work. I can't sit there and ideate and kind of fathom. I'm a pretty insightful guy. And when I get to know people, I can make certain suggestions and ask really good questions because I'm a good listener, which I think is key to being a good coach, mentor, so to speak. Again, I would focus on your process because, your process is linked to behavior. Behavior predicts where you end up. It's very difficult to predict how much money you're going to make or when the right setup is going to show up. And so people tend to say like, man, I'm down 5%. There's been times where I was down. Like I was telling somebody recently, because I put on small risk and then I keep adding and adding and adding and adding, a lot. So I had like 7 losing trades in a row in coming through September and October. Now these are like 0.1% paper cuts, but for the untrained eye, it could still be aggravating. You know what I'm saying? So, but it happens, and you have to take the thick with the thin. I don't know that the next trade is, not going to work out. I also tend to trade large, hence the paper cuts, right? So you might give the thing 4 or 5 ticks, and if it doesn't move, like I'm not going to stick around with a monster position. So my timing's off. Is it me or the market? I don't know. When I get towards the end of the year and I take some time off, I'll take a look. I'll go back and look at time and sales. I'll look at the chart and kind of see. And maybe if I do it sooner, I'll talk about it in like the mastermind. But I won't sit there and fuss over returns or not. Hang on. I won't sit there and fuss about, losing money, because that's part of the game. There has to be that asymmetry that I'm looking for between what I'm willing to risk and what I'm looking to make, and in some of those instances, admittedly, it's way beyond 5 to 1. You know what I'm saying? So I know when those trades eventually hit, there'll be a deluge of cash coming into my account. But in the meantime, I have to sit there with the same humility that you have to sit with and say, I'm glad I sidestepped some of those larger drawdowns and trusted my instincts to get the hell out of those trades before I gave them too much room. Why would I do that? I don't want to get into it here, but again, in some of these names, the IV, the implied volatility in the option market is, 125 to like 170. So you can't buy calls on the names. Maybe you can. I can't. I don't have the skill on how to do that when IV goes berserk like that. So you have to trade size with the underlying. Of course, with the, delta is 1 when you're trading the underlying. So, I'm very willing to risk those paper cuts. And I have the mental stamina and the fortitude, to do that. So I don't internalize like the frequency of those losses or the amount of money that I lost, because I know all the upside is around the corner. It's just a matter of time. It's not like this destabilizing situation where I'm going to fall to pieces. So I'll look at that and see, did I miss something? Another good thing to do, because it just tends to be, this time of the year, people are very, very reflective. What was something that you wanted to get done in 25 that you didn't get done, and like why? Was it, again, information that you needed? Was it guidance? Did you need capital to invest? Or did you just, like, again, think that it was something that looked good on paper, but it was harder to put to work? And investigate whether or not that's something you could put on your to-dos for Q1 of 2026. Like, what would you need to have happen in order for that to become a reality? Like if you're going to learn how to trade another asset class, or if you're on the short scalping, day trading, how can you assimilate swing trading? Because you'll have another arrow in your quiver, and you'll be that much more valuable to your entity and to yourself if you understand another time frame. Don't forget also to think about personal growth. Were you meaning to pick up meditation? Did you want to try yoga? Did you want to try cannabis sativa? Like, no, just kidding. Did you, did you want to, create an online journal or a Discord or whatever it might be? Look into that, because again, what we're looking for here is personal growth. If you can grow as a person, I believe that's going to absolutely trickle into your trading. Um, are there new strategies that you want to deploy? So, if, for example, if you are trading long calls or bull call spreads, are there other things that you can do? Like I mentioned with high volatility markets, do you want to trade vol crushes using, say butterflies or condors or even a broken wing strategy? That's learnable, right? You can do that. There are a lot of resources available for you to learn those tactics. But don't forget now, new tactics, new strategies bring a new set of emotions to you. Typically, in my experience with options, when you have credits or net credits, those are your max gains. And for me, in the way I thought and the money that I wanted to grow, those were not enough to get me excited. So I didn't want the max gain knowable. I wanted the variability. You might not like that variability. So you might go looking for these types of, bull put spreads that are net credits and saying, I'm looking for those things when I can clear 300-400 bucks per spread. My mind doesn't work that way. It does not better or worse than yours. I'm just saying that that's not my natural proclivity to look for that. I would much more come to the market and say, okay, $400 debit or net debit. Well, net debit would imply that there's a call for sale above it. And I don't really trade call spreads, net debit, bull call, vertical bull call spreads. I don't do that. So I'd be much more comfortable saying, okay, I'm put down 15K total on a bunch of calls, and I know my upside is 3, 4, 5 times that, given where the chart is, where the IV and what the delta is. I always liked that uncertainty because I always associated that feeling, the emotional feeling that I had with the uncertainty of the outcome, with being more of an upside surprise. That was just how I was built. So when you think about new strategies that you want to deploy, think about the new feelings that are going to come with that. And what are those feelings that you're willing to feel right here, right now? Right? Because as a wise old turkey used to say, the feelings that you don't want to feel have as much control over you as the ones that you don't want to feel. You know what I mean, Vern? So anyway, those are just a few bullets. You can do so much stuff with like your health, your diet, your money. Do you want to run more clients? Do you want to set up an RIA? Do you want to register with the NFA as a pool operator or as a CTA? If you're paper trading and doing these funding challenges on paper, do you want to start trading real money? Like it's unlimited as to what you can do. And I would really challenge yourself, because chances are you're just as good as anybody else. The difference between successful people and unsuccessful people many times is just the successful people were willing to endure the mental stuff that you have to go through, the consistent failure. And I talked about jiu-jitsu, and you do nothing but you do nothing but lose pretty much for your first year to 2.5 years. It's a long time of not ringing the register, so to speak, because you don't know any technique, and just like in trading, jiu-jitsu is about playing superior defense. So those are my thoughts for today. If you're new here, please like and subscribe. A good chunk of you watch the show, but you're not subscribed. I get really good data then about what really resonates with the audience. And please, if you haven't gotten it already, you can get a free copy of the audiobook version of The Inner Voice of Trading, my book that came out in 2011. It's got 4.5 out of 5 stars. You can get the audiobook for free. Link is in the description. Thank you very much for being here, folks, and I will see you next time.